Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news of an important election change in America. US midterm elections have been tough on incumbents, with some dramatic switching away from the Democrat Party. Both houses of Congress will now have Republican majorities, with the Senate back in the red corner. The final 2 years of Obama's term will be a tough one for him. Having said that, the winners on the Republican side are tending to be more moderate candidates. Despite that, the message is clearly anti-Democrat. Unease in these results outside the US is not reflected there. Markets are pricing risk the same way as before. One consequence for New Zealand out of this change is that President Obama now may be able to make necessary compromises to get the TPP deal through Congress. This Saturday we get the latest US non-farm payrolls report, which is major market data. Today we got the precursor ADP payrolls report, and that was better than observers are expecting. It showed payrolls expanded above 200,000 for the 6th month out of the last 7. That is a good sign for Saturday in buoyed markets. The Dow and the S&P 500 are both at or near all-time records. Earlier this morning, the Federal Reserve unveiled a final rule designed to prevent large financial firms from becoming so big that their failure could shake the core of the financial markets. No one institution can now be bigger than 10% of the total US financial system. If that rule was in place in New Zealand, our 4 biggest banks would need to be dismantled. Meanwhile, service industry activity slowed in the US for the second straight month in October, suggesting some loss of momentum in their economy early in the fourth quarter, although it is coming off a very strong level. And here's an eye-watering factoid. Investors pulled $48 billion from PIMCO's mutual funds in October following the departure of star manager Bill Gross. In Australia, a major analyst has issued a stern warning. Australia could face its first recession in almost 25 years unless authorities further stimulate their economy, Morgan Stanley said. Growth there will slow to under 2% and unemployment could reach 7%, they said. The iron ore price has fallen further in the past week. And China has announced that it will designate prime arable land near cities, believed to be prone to expropriation, as permanent basic farmland to safeguard food security. In New York, US Treasury bond yields were again flat in trade today and are currently at 2.36%. The oil price has stayed firmly at its new lower levels and is now just over $78 a barrel, with the Brent price just over $83 a barrel. The gold price, however, took a further tumble and is now below $1,149 an ounce. Following on from the surging US dollar, we lost all of yesterday's gains in the Kiwi dollar. It is now at 77.2 US cents, 89.9 Aussie cents, and the TWI is at 76.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.